Ever pondered the intricacies of index funds, stocks, mutual funds, and ETFs? These financial instruments, though seemingly complex, can be understood with a bit of patience and a keen mind. So, buckle up as we delve into the world of finance and investments, demystifying these terms one at a time. First off, stocks. They represent a slice of ownership in a company. When you buy a stock, you're purchasing a piece of that company's assets and earnings. Think of it as having a tiny claim to everything the company owns or earns. Stocks are bought and sold on exchanges, and their prices fluctuate based on supply and demand dynamics. Now let's move to mutual funds. Imagine pooling your money with a group of other investors, and then hiring a professional to manage that pool, investing it in a diverse range of stocks, bonds, or other assets. That's a mutual fund for you. The key advantage here is diversification, spreading your investments across a wide range of assets to reduce risk. Next up, index funds. They're a type of mutual fund with a twist. Instead of a fund manager making decisions about how to allocate assets, an index fund simply aims to replicate a specific market index. It's like a mirror reflecting the performance of a market segment. They're known for their low fees and broad market exposure. Lastly, we have ETFs, or exchange-traded funds. An ETF is a type of fund and exchange-traded product, meaning it's bought and sold on exchanges just like stocks. They're similar to mutual funds, but with a key difference: they can be traded throughout the day like stocks, while mutual funds are only traded at the end of the trading day at the net asset value price. So how do these instruments compare? Stocks give you ownership in a company and potentially high returns, but they also come with higher risk. Mutual funds offer diversification, but their performance is reliant on the skill of the fund manager. Index funds, on the other hand, offer broad market exposure and low fees but lack the potential for outperformance. ETFs combine features of both stocks and mutual funds, offering diversification, the ability to trade throughout the day, and typically lower costs. To summarize, stocks are pieces of companies you can own. Mutual funds are professionally managed investment pools. Index funds are mutual funds that mimic market indexes, and ETFs are a hybrid of stocks and mutual funds. Each has its own advantages and risks, and the choice between them depends on your investment goals, risk tolerance, and investment horizon. Remember, investing is not a one-size-fits-all endeavor. It's about finding the right mix of these instruments that aligns with your financial goals. So, equip yourself with the right knowledge and make your money work for you. As we wrap up this informative journey through the world of financial instruments, we hope you've learned a lot and are better equipped to make investment decisions. If you found this video helpful, please hit that like button and subscribe to our channel. Your support enables us to keep producing more informative content like this. Also, don't forget to hit the notification bell so you won't miss our future videos on finance and investment. We appreciate your time and thank you for watching. Stay tuned for more insightful content, and remember, the journey to financial freedom begins with a single step. As we prepare to sign off, we want to express our gratitude for your participation. If this video has enriched your understanding of finance, we invite you to show your support by hitting the like button. It may seem like a small action, but it signifies a lot to us. If you haven't become a subscriber yet, now is the perfect time. We regularly update our channel with insightful content on finance and investment, and by subscribing, you make sure to never miss out. Feel free to share your thoughts, queries, and experiences in the comments. Your engagement helps us in nurturing our community of well-informed investors. Remember, your support goes a long way in helping us create more educational content for you. Until our next video, continue learning, investing, and growing.